Every year, we cover the good, the bad, and the ugly in payments in Latin America. The good showcases positive developments or opportunities. The bad highlights problems or threats, and the ugly covers trends or challenges that could become massive problems for the industry. In this video, the good is that in Latin America, digital payments now represent 60% of consumer spending. Back in 2022, cash made up 57% of consumer payment volume in LATAM. Today, that number has dropped to 37%. And if we weigh the size of each country's economy, it falls even further to just 31%. What's driving this decline of cash? For one, instant A-to-A payments like Pix, SPEI, and Yape, plus the steady rise of credit and debit card payments. Brazil is leading. 14% of people say they never use cash. That's up from 9% just a couple of years ago. And only 22% say cash is their most used method, down from 60% in 2018. Even Mexico, often seen as a laggard, has made real progress. Cash usage dropped from 66% to 47%. But this transformation isn't uniform. Central America and the Caribbean still face huge gaps. That's why we divide the region into 3 clusters. Number 1, acceptance growth markets, where the challenge is onboarding small merchants for payment acceptance, markets like Mexico and Peru. Number 2 are infrastructure growth markets, stuck in legacy systems and regulatory roadblocks, like Guatemala and much of Central America and the Caribbean. And then number 3, digital expansion markets like Brazil and Chile, where disruption into traditional bank transfers is key to expanding the pie of digital payments. And that's where things get interesting. As cash fades, what's next for payment providers? The answer? Cannibalizing traditional money movement. Verticals like education, healthcare, transportation, and insurance are full of slow manual payments. As cash declines and companies are forced to look for new opportunities, that's the new frontier. And here's the kicker. While instant A-to-A is scaling fast, cards still dominate in volume across the region, even in Brazil. Card networks need to ask themselves, should we fight for market share in new verticals? Should we add more value to existing card payments? Or should we go after outdated payment methods like checks and ACH? One thing's clear. Latin America is not just catching up. It's innovating, leading, and building a more inclusive and efficient payment